this is another one of those finishing well shows I know you're going to be glad you tuned in for, because, so much of finishing well has to do with a larger story, right? I mean, Jesus is going to come back, a lot's going to happen, but there's a lot more that's going on with your life than just what you're doing now. At some point in time, you're going to be gone. And so part of the larger story for all of us is what happens when I'm gone. And Hans, as I got a chance to see I Can Only Imagine, the movie that just came out recently about the song I Can Only Imagine. And so kind of speaks to the topic today. What's it going to be like when I'm gone for my family, right? I can only imagine. I can only imagine what it's going to be like for my wife. I can only imagine what it's going to be like for my kids. So part of finishing well is looking into that. And in the case of Bart's life in I Can Only Imagine, his early fatherhood was tough. I mean, he beat his son, and he was very broken, and is not to, spoiler alert, obviously he comes to Christ in the movie. But one of the key things that they brought out is after he'd gotten his life straight, and after he tried to quit putting down his son and actually build him up, he wanted him to live to be a singer, to live out his dream. And so he bought a life insurance policy and set it up so that Bart would get a payment so that he could live his dream until he could get on his feet as a singer. And they show at the end of the movie that he got a check right up to the month that they released I Can Only Imagine, which actually, as you can imagine, launched the band Mercy Me, and they went on to be, obviously, to support Bart. But what do you think that meant to Bart? I mean, yeah, he lost his father, and that had to be really, really hard. But what would that mean for your son to realize that, wow, I'm going to be able to live my dream as a result of what my dad, invested in me?
Robby, in my career, I've delivered over 200 life insurance checks to beneficiaries and sat with these folks. And I can just tell you what it means to them, beyond the money, just how much love there was there for the person. It's really love coming from heaven and from the grave. I mean, it was done while they were alive, but just those checks coming in, I mean, every month. That's probably why his father set it up that way, is because you can set up a life insurance payment for your beneficiary that instead of getting a big hunk of money, they're going to get a check every month. And so every month he's getting that check. And you know what that did for his self-esteem and his motivation to be successful in his music career. That's terrific.
And I think it meant a lot to his father that here I know I've blown it as a father, but here's a way that I can invest in my kid's future and show him that I believe in him and I got faith in him. So the neat thing is that our estate is part of God's larger story. Our spiritual estate, obviously, the way we've invested in our families, by learning the Word of God, et cetera, but also the financial aspect of it, really, in this case, think about it, Hans, none of us would have that song if it weren't for, Bart's dad investing in life insurance.
Well, yeah, and so, we started out before the show here, we're talking about, where do we want to go with this discussion of life insurance, and I want to really get it down to, what it really is. I mean, that's what I told Ronnie. I want to convey to everybody, this is serious business. And, if you're in reasonable health, and a lot of young people are in good health, or maybe they don't know about their bad health yet, for that's coming, but for a very small amount of money, if you're young or middle age, or even approaching retirement, if you're in reasonable health, you don't have to be a jogger or anything else, you can purchase life insurance or create an estate with just a small amount of money every month. It's a miracle, and especially when this stuff pays off.
Yeah, and you were telling me earlier that there was one question you've never had anybody ask when you were handing them the check.
Well, yeah, I got to give them a little background, is that last show, we talked a lot about the difference between whole life and term insurance, which is where a lot of life insurance discussions go. And I'm going to tell you why they go there, is because that's a safe conversation to have. We're talking about numbers and talking about math and company profits and people's premiums, and we're just talking about safe stuff. What I'm proposing that we talk about, and we're going to talk about on this show, is difficult stuff, okay? Which is that, I might meet an early death, and I might leave my family in a very difficult situation. And the way to mitigate that, they're going to be in a difficult situation if I die early or I die young or I die in middle age, with or without life insurance. They're going to be in a difficult situation. But the life insurance is really going to make it possible for them not to have to struggle over money, or to struggle less over money, and really focus on the really important things. The question that I've never been asked by these 200 beneficiaries is, now, was that term insurance or was that whole life that my father bought in leaving it there, my husband bought? Nobody's ever asked that. Nobody cares. And the life insurance company doesn't care. They don't put on the check, this is for settlement of whole life insurance, or this is for settlement of term life insurance. They just make out a check.
Right. So the whole concept of where are you going to leave your family in this situation? And unfortunately, I in my car business experience, I had a limited experience with it, and I can remember the phone calls well. When people would say, Robby, you remember that credit life insurance that you offered us? Did we buy it? Meaning that my husband's passed away, and he didn't have any life insurance, and now I'm in a situation where I got to make car payments I can't make. And obviously, with a financial planner, you understand there's better investments than credit life insurance. But in some cases, it sure would have been nice if they had something, because at that point in time, they didn't care whether it was credit life insurance or whole life or universal life. What they cared about was, I can't pay the payments on this car because my husband's passed away, and he didn't even leave any life insurance to get buried.
Listen, my own sister, who I write about in my book, passed away in 2011, 57 years old, didn't see it coming. She had a brain aneurysm. She was gone in minutes. My brother-in-law is a CPA. He's a CFP like me, a certified financial planner, who's not practiced. And I write about her. My sister's name is Margot, and I write about her in several places in this book, The Complete Cardinal Guide to Planning for and Living in Retirement. She had no life insurance. Her dad was in the life insurance business for 30-some years, her brother at that time.
And that would be your dad.
Yeah. Yeah. That's
There's
good.
Stories there
Keep
too,
me straight. Keep me laughing here. I had tried, but I didn't push her back. I had tried with him and brought it up. I didn't try as hard as I should try, and I'm forever regretful with that. But I remember what he told me very soon, because he's also my accountant, does stuff for my business. We even send a lot of clients to him. He said, 2 incomes was great. My sister had 3 jobs at the time she died. She was a nurse practitioner, and she was a very caring person. She was just a worker like all us Shiles, and she just didn't see the need for that. She had bought a new Mercedes that she was driving around to all these 3 jobs. That brought her a little bit of joy. She made a lot more money than he did, and he was in a world of hurt. Obviously more hurt for just losing her. He's never going to be over that. But, he really had to crank up his own work and his own business and tap into his savings. And that all could have been prevented, or at least mitigated, with just a small amount of life insurance, just a $100,000 policy or something, which he could have easily purchased.
And I got it, in my own experience. For one brief shining moment, there was Camelot. That when my wife was fairly young, I bought that $100,000, and it was a universal policy.
Sure.
And my financial situation went south, 15, 20 years later, where I really couldn't afford the premiums on it more, but because of the type of life insurance it was, it has made the payment. I mean, I've had that life insurance on my wife now for I don't know how long. I haven't made a payment on it in over 10 years, and it's still absolutely, will keep going forever now. And it was just because, like, you know, somebody like you came along and said, Robby, you really need to look at this because, you know, so I always feel protected on that side of my life because of a good decision we made when we were young.
Well, and so let's move this to retirement planning now, because that's most of our audience is people 50, 60, 70, 80. And, you know, when you go in the workbook, there's a lot of financial planners like me say you don't need life insurance when you're retired. A lot of you have decided that. And frankly, you probably don't need it as bad, okay, if you've got assets, if you've got some money laid back for this purpose, if you've gone down and purchased your funeral. It's still, you still need it, and it's advisable that you get it, perhaps just a smaller amount. And it could be that your term insurance that you carried your whole life, it's ended. You're 65 and you just projected and you just had it and it's ended. In my workbook, I go through and I show just how inexpensive it is for a 55-year-old and a 70-year-old to buy $25,000 worth of life insurance. And every one of these policies is whole life. So there's no point in buying insurance at you're 65 for just a term. I mean, so you're buying this to know that there's going to be $25,000 worth of instant cash available to your family. And there's all kinds of ways to pay for it. You can pay for it with a single premium. I mean, I'm looking here. If I have a 55-year-old female, would pay $10,593 one time, and she has a paid-up $25,000 life insurance policy.
And if you got a story, I'll bet, along those lines that's happened with your situation?
Lots of people. We have lots of people buy this. And let me just show the 70-year-old is $15,432 for the same thing, single premium. And so you've got people with savings. Maybe they've just got it in cash in the bank, and they're just saying that's what it's for, and I'm just going to leave it to my kids. Well, this is the way you can turn $15,000 into $25,000 tax-free with a single premium whole life. Now, some people can't afford that. They're not going to do that. You can pay a monthly payment for this. Certainly, I do have stories. I have lots of stories of people that have bought all different kinds of plans.
Yeah, we've got so much more coming at you on this. The larger story, what happens when I'm gone, edition of Finishing Well with certified financial planner Hans Scheil. Again, it's brought to you by cardinalguide.com, where you'll find a free download of today's topic, which is life insurance and estate planning. So when we come back, we got stories. You're not going to miss it. Stay tuned.
Thanks. Yeah, what I want to do is go quickly so I can tell a story about a single premium whole life. And actually, my mother-in-law had just that amount. She had $25,000 worth of single premium whole life that she bought about 10 years ago with just some CD money. And that money just comes out immediately. It's tax-free. And, you know, it was divided by 5, so it was $5,000 each. I don't really want to. I mean, this is just simply a matter of taking some savings and just avoiding the monthly payments. But the same person can buy.
Well, what I would think it'd be good if you told a story about the single premium, but then also tell a story about someone who their plan was better to make payments on it, and obviously you were there when the check got handed to whoever, and something that.
Yeah. I mean, it's going to be hard for me to go over one of those because usually I didn't sell those policies. I mean, I was the branch manager for this huge agency, and so when those things would come down, I'd go deliver it. So I don't really have too many stories where I was the salesman before, met the person, and then delivered
Right.
the check. What I do want to show you on here, let me just real quickly before we come back. This is going on the radio, but what I want to show you on here is this is the no underwriting policy. So you could have somebody sitting here and saying, you know, we just took care of a guy that had his second surgery for throat cancer in like 3 months ago, and They say they got it all. His insurance ended, and we were just out to see him, and he didn't buy 25,000. He bought only 10,000, but he wants some life insurance, and so,
That's
this free.
female, but
Well, it's all
Yeah.
the only thing that's in there is female. But just my point is, this guy was 65, and we've got no underwriting life insurance. You can have people that have cancer, people that have kidney dialysis, people that, that want some small amount of life insurance and just know that there's a payment there. They can buy it. It's going to be a little more expensive, but not terribly more expensive.
we'll tell a couple of those stories, then move on to estate planning.
Yeah. Yeah, let's just bounce around this a little bit and just show how affordable this is, and then move on. Yeah.
Okay. Welcome back to Finishing Well with certified financial planner Hans Scheil, brought to you by CardinalGuide.com. We are talking today about the larger story. What happens when I'm gone? Last week we talked about risk, and I realize it's risky to even think about, wow, I'm going to be gone, and there's things that I can affect even, essentially from heaven. So, Hans, when we were, right before the break, we were talking about people who bought policies even up in their 60s and 70s.
Well, yeah. I mean, just a client comes to mind that was with us just a couple weeks ago, and this gentleman, he's just turned 65. His wife's 65. They met us through the Medicare supplement. We drove down east, which is east of Raleigh here in North Carolina, and we met with them, and we helped them with their retirement money and setting up their income, and that's all pretty easy. And then we get down to life insurance, and this guy just had surgery for throat cancer like 2 or 3 months ago. I mean, he's not certain he's going to be around, in a couple of years, but the doctors have given him a lot of hope. This is the second occurrence of it, and his life insurance had expired. I mean, it was a group plan, and it only lasted as long as his employment, and both he and his wife purchased life insurance. And you say, well, how can you write life insurance on somebody that just had throat cancer? And we have guaranteed issue life insurance policies, no health questions. Now, if he dies in the next 2 years, what's going to happen is the money that he paid in premiums plus a little interest is going to be paid to his wife or to his beneficiary. But if he makes it 2 years, this policy is just like any other life insurance policy. It just goes on for life, and it'll pay its full benefit. So that's how the life insurance company can issue that on somebody with no underwriting. And he didn't buy 25,000 like in the workbook. He bought 10,000, and that's just giving him a lot of security. Even though he's got this other money that we're managing, his wife knows that there's going to be money there to pay the funeral and last expenses, and they're very, very helpful with it. And my workbook, I was just walking you through this, is you can download this thing for free. You can also purchase the book at Amazon if that's your desire. This is the workbook that we're speaking about, and we're on pages 87, 88, 89, and so on, and we take an example of a 55-year-old person and a 70-year-old person, and then we run them through all the different options. They're all with different companies. I don't name the companies, so these are not quotes of life insurance, but it's just to give you an idea of what the cost would be to put $25,000 of life insurance on yourself, paid to your beneficiaries, with all the different things depending upon your health. And there's no such thing as the person is in too poor health to buy life insurance or too old. We write these through age 89.
Right, and so those are expenses that are coming. And the nice thing about, we've talked about in the last show, liquidity, life insurance comes tax-free and immediately.
Mm-hmm. Okay, so let's talk a little bit about estate planning, okay? And what I want to talk about with estate planning, is first of all, a lot of times estate planning is just cover for I'm here to sell you a life insurance policy. I mean, there's a lot of folks call themselves estate planners, and they do that, and they talk about estate planning just because it sounds nicer than life insurance, okay? And so I don't want to be that person. If we're going to talk about life insurance, just like the beginning of the show, that's what we're going to talk about is life insurance. Now, estate planning is where you're simply planning out and you're saying, okay, what's going to happen after I die, and you're planning out who gets what.
Right. It gets back to the, the Bible's real clear on leaving an inheritance, that it was a big deal all through the Old Testament that, certain things passed from generation to generation. And so I think this is a huge area between each of us and God, and what do we pass, and things that we feel like need to go on. It's a part of our story that as we invest in the larger story, our family are the arrows that go out from our life, right, according to the Psalms, that are going to continue this thing on.
Well, the people I'm sitting with yesterday at 4:30, that they're listeners of the show. She's very complimentary and asked for a meeting. I met them down in Charlotte. They have a son who's in his 30s who has various medical conditions. He's on Medicare and Medicaid and Social Security disability, but they want to set aside some money in a special needs trust to make sure that he's taken care of beyond their life. And that's estate planning, okay? I mean, I could get into all types of worthy purposes. Another gentleman that we stopped by and saw up here in the Winston-Salem area that we're going to do some, he's already a client. He wants to leave a good bit of his estate to Christian missions and Christian organizations. And, there's no really wrong way to do that. It can be pretty simple.
Isn't that one of the places we talked about in a previous show for a 401k is a way to get beyond the tax implications of that is to give it to a nonprofit.
You can do it with a QCD, qualified charitable distribution. And certainly some of his money is in an IRA, and we're going to want to leave all of that to a charity. Okay, I mean, and but this guy has land. He's got a business. And he's got nephews and nieces. He's got no children, so that makes this a little bit easier. He does want to leave them something. He has a sister that's still living. So we're going to really have to sit down and figure out, okay, so how much do we want to leave them? How much do we want to leave to the church? And then...
Or Christian mission.
Christian missions, that's what I mean, yeah.
Someday he's up in heaven, and somebody shows up and goes, hey... I'm so glad that you left that, because they were able to buy whatever church building that eventually I got saved in. And, hey.
Oh, absolutely.
That's the kind of estate I'm talking about, those kingdom books.
Well, yeah. And then we're going to sit down and we got to think about taxes. So once you're giving your money to God and you're passing it on to a tax-exempt charity, then we got to figure out the best way to do that, because if we can do this tax smart, we can leave more to them. And so we're going to want to leave tax-free money to those nieces and nephews and sisters. So we got a little bit of work to do, but my point is that estate planning is like planning that out. And the most important part about estate planning for him, he already knows he's going to leave his money to the Christian mission. In fact, he's already written some stuff. He's all excited about using the attorney that we refer him to, who works very inexpensively, which is great. She's right in our office. She's going to sharpen some of that stuff up. He's very interested in redoing that. But he already knew he's going to leave his money to the church. What he's interested in is specifically what happens before I die. Okay, so now we got my whole estate here, and I develop Alzheimer's or I have a stroke and I can't make these decisions. Who's going to take care of me? Who's going to pay the bill over at the assisted living? Who's going to pay the home health care that people that are coming in? And how is my niece or nephew, or which one of them is going to be in charge of my care? And, is that going to affect the amount of money that I leave them? Or do I want a stopgap in this to provide some additional? There's all kinds of questions, but now we're talking about your planning for your estate, but you're not gone yet. You're still in this world, and you need to be cared for, and you're incapacitated. And so that's what the point this is all over the book. There's even examples in the workbook of these documents so that we've done for clients where we've blacked out the name and just showing you need, most people know they need a will. And the will is going to take effect after you die, okay, or when you die. But you're going to need that. or you're going to need an update of that. Many folks have wills, but they're 20 years old, and they need to get them back out and look at them again. You need a power of attorney, and a power of attorney ends at your death. So if you give somebody power of attorney, when you're deceased, that has no effect anymore. The will is what's in charge then. But the power of attorney allows them, this guy has a business. He's 75 years old. He needs somebody that's going to step in if he became incapacitated tomorrow and run the business and sign the checks and distribute the inventory. I don't know. We're going to figure out exactly what we're going to do with that. He needs a trusted power of attorney, okay? And we need to spend some time on that.
I've lived that one with relatives that were in the hospital, incapacitated. We have no access. Their bills aren't getting paid. Nothing's going on because nobody can do anything because they didn't plan.
It's real simple. I mean, and even a simple power of attorney. Then the next thing is a health care power of attorney. So it's a separate document, gives the same authority, but it's now over health care decisions. And it's somebody can negotiate with the hospital, with a health care provider, with an insurance company, just all that kind of mess. You need that too. And then the fourth document is a HIPAA release. And you know, a lot of people, the first thing, oh, we signed those down at the doctor. We already signed those. Okay, great. For that doctor. What we're going to want to do is give this important, trusted person in your life a general HIPAA release that they can hand to the doctor when you can't sign it at the doctor. It's going to give your daughter or your spouse or whoever that's important to you that you can trust with this the ability to look at your medical records or to write to them or to talk about paying a medical bill or to negotiate one. So really 4 documents you need, pretty simple. I don't have a lot of advanced estate planning advice in the book. I certainly know a lot of that and can provide that to you, but the book was intended for the average folks. And there's a lot of average folks even that consider themselves average, and they some of them have a few $1 million, you know.
And it's helpful, really, in the book, like we talk about, you know, under the 7 worries. If you go to that life insurance and estate planning, it gives you these documents that, you know.
Sure.
You were listening to the show, you're like, what was that third one? You could go right to thecardinalguide.com, and it's absolutely free to get that PDF, or you can spend $2 and get the ebook, you know, whatever you want to do.
Yeah. And, you know, I've had people tell me, well, God's going to provide for that. And I've done all the estate planning I need. Okay. But there's all these resources available in this world to distribute the things of this world. And what I would say, and I feel very strongly that this is very in line with God's purpose, is to plan this stuff out well and empower your family and be as little of a burden to your family as you can while they're raising their own families, in terms of taking care of you and having the legal effects, having what it takes to actually pay the bills.
Yeah, it's part of the planning process, and you know, with many counselors, plans succeed, and things to think about. So I my hat's off to all of you listening today that are at least willing to enter into the conversation, because this whole idea of, you know, what happens when I'm gone or what happens when I'm incapacitated, it's not all that easy to look at unless you've got that larger story view that God has got a plan for your family. He's got a plan for, you know, later on when you're in heaven. There's stuff that's going to go on that you're going to really be glad, you know, for what he put in your life, which may have even been you listen to this show today.
This isn't really of that, and it's not as important as that, but it's still very important.
Yeah, oh yeah, well, it's happening. Because you think about, we can only imagine, we talked about it at the beginning of the show, because his father was willing to think about, wow, I need to invest in my son, and this is the way I can do it, you know, and made a change. All of us are benefiting from, you know, one man's look into eternity. So
my wife and I are going to see that movie this week. We've had it on our list for about a month.
Well, you've been listening to Finishing Well with Certified Financial Planner Hans Scheil, the complete Cardinal Guide to Planning and Living for Retirement is a book we keep referring to. Again, the show itself is brought to you by CardinalGuide.com. How fun was this? Thank you again, Hans.
Thank you. Okay. You know how to shut that off? You could probably train me to do this part of it, and then you could.
I'm going to be glad to turn off that light. It's cooking.